Looking at the central bank in the market once again yesterday, mopping about $60 million through repurchase agreements. Your thoughts on the kind of activity we are seeing from the central bank at this stage?
Well, the central bank has been very keen on defending the shilling, and hence the situation whereby they keep on picking up excess liquidity so as to ensure that the shilling is firm against the dollar. Hence the appreciation you've seen lately to levels of 83, 83.10 from lows of 80, 85. So the central bank will continue ensuring that there's FX stability on that front.
We did have the shilling falling back in his last week's trading session after the central bank decreased rates by 150 basis points. Could we perhaps see the central bank decrease interest rates going forward?
Well, the current governor, ever since he started his tenure, he's always been pro a low interest rate regime. And the situation we are in currently is mainly because of the big slide of the shilling to 107 against the dollar, hence the high interest rate environment. But the governor is always keen to ensure that interest rates are low. So of course we expect we expect more slashing of the CBR. Will be headed towards levels of 11, 10 shillings, then after a single digit, just to ensure that the economic growth is also stimulated.
Looking at the fixed income market came under pressure after that interest rate decrease. Treasury bills, the rate falling back, currently sitting at around 10%. Is the CBK comfortable with these rates?
Well, actually, on the contrary, T-bill rates have been edging up slightly. There's been some dislocation in terms of CBR being maintained at 18%, now 16.5%, and T-bill levels of about 10%. So most institutional investors have been happy putting money in deposits, and banks lending on interbank, and also via the term auction deposit vehicle that was recently introduced. Hence the dismal performance of T-bill auctions. But going forward, we should still expect the rates to edge up slightly, just to approach the levels where probably interbank level is.
Looking at the auction coming through this week, the central bank will offer about 3 billion shillings each for the 91-day and 182-day treasury bills. What kind of demand can we see coming through? Like you said, rates are coming down on the treasury bill front, and what type of yields can we see?
Well, of course, the bidding will be very aggressive as investors trying to lock in relatively good rates. I'm seeing probably between 50 to 100 bips in terms of yields from previous, going up from previous auctions. But until such a point that the T-bill rate becomes more attractive in terms of an opportunity cost analysis, that's when you'll see participation increase.
Now looking at, there's also talk of people really moving from the fixed income market into equities, given the returns that equities are currently giving at the moment. Are you seeing this type of move occurring at this stage?
Well, the equities market has been quite active, especially on the back of declining rates on especially money market side and also towards the intermediate section of the yield curve. And what we are seeing is that most institutional investors are parking equities at the moment because they've been very high. They've been high on cash positions, and they've already picked up bonds at high yields. So they're waiting for the rally to start. But in the meantime, in terms of asset allocation diversification, they are also picking up equities which have been quite discounted. You find current fundamentals are very attractive on that front.
Could we perhaps see the central bank exiting the open market operations? The shilling is pretty comfortable at 83.90.
Well, central bank will be still active in the open market operations for the simple reason that we still have quite a substantial current account deficit, and that will continue applying pressure on the shilling. So they'll always ensure that they are monitoring the liquidity position in the market.